Hello, everyone, and welcome to The Buck Stops Here. I am Catherine Murray. Well, we've certainly seen the markets resume their upward climb over the past number of weeks. The question is, does the market have it right or not? To weigh in on this is Diana Avigdor. She is VP, Portfolio Manager, and Head of Trading at Barometer Capital Management. Diana, great to have you and have your perspective because I think there's a lot of unknowns right now. The market's saying one thing, that things are going to be fine. Yet that does not dovetail with all of the negative headlines. What's your perspective?
Hi, Catherine. Thanks for having me again on the show. Seriously, this is the most amount of unknowns that I've ever seen in my career, frankly. And the market is so disconnected from the headlines. Every single headline is negative, be it tariff, be it recession, be it inflation, be it, geopolitics. Yet global markets are making new highs, Canada included. The MSCI ex-US is up 17% year to date. And even the U.S. is up. The S&P is up 2%, 3% year to date after being in a full bear market and a full bull market all in the last 6 weeks. So, um, you know, you have to scratch your head and say, you have to deal with the market that you have, not the market that you want to have or you
Sure.
think should have. So we have to get our arms around what's going on right now. And I can think of several reasons why it's like this.
And so do you buy into the fact, for newer viewers, the market is a forward mechanism, forward discounting mechanism. So in other words, if the market's going higher, it's basically telling you that all of these issues, maybe they're noise and they'll get resolved. Are you in that camp?
I think psychologically and thematically, one of the biggest shifts that the Trump administration has done with his tariff shenanigans back and forth, because we still don't know how much tariff is on what, on who, and when. But one of the biggest shifts is that it catalyzed the rest of the world from a passivity and the reliance on the US since Second World War, really. It created a situation where each country, including Canada, looked at themselves and asked themselves, is this much reliance on the US economy a healthy thing for us? We know our Canadian narrative has been that, even in steel, we're so reliant on the US market, and now we have 25 or 50, or now it's 50, tomorrow's back to 25. In his first administration, it was 10. That went over okay. We survived. But really, on all kinds of other platforms, diversification and independence, economic independence, anything that countries can do to do that would benefit them. And we've relied on the U.S. The world has relied on the U.S. for markets and for global police since Second World War, really. So you look at Germany and other European countries, UK, they're all looking to see how much they can spend on defense and inside their own markets. Germany is making new highs as well. So I think that catalyst um, could be good longer term for the individual country.
Well, it's interesting. It could be good for the individual countries, but right now, given where we're at, that those countries have not matured in their own internal economies, but they're making those changes now. You have to really wonder if, like the OECD said, in terms of decreasing the global growth outlook and as well as many countries' outlook because of the tariffs, among other things, if we're going to be in some type of difficult period, I don't know, for the next year or 2 years, and if that just kind of sidelines the markets are not saying that, but according to the OECD, we should be expecting slower growth, particularly here in Canada. They did highlight Canada, China, and Mexico as being the biggest losers on the back of the tariffs. Now, whether or not that's true, I'm not sure. The U.S. ambassador to Canada said we actually are going to be benefiting. Um, so it's difficult. I mean, where do you stand? And we'll take it to the next segment. But where do you stand in terms of growth, U.S. and Canada for this year?
Yeah. So, by the way, the OECD is late to the party. the street has already discounted the growth. I think they said for the US was 1.6%. Most of the streets are already at 1.3%.
True.
So
Wait,
they're all
Dana,
pretty.
we'll pick it up on the other side of the break. We'll be right back.